I'm Phil Larman,
And I'm Douglas Borthwick.
and this is Old Men, New Money.
So thank you very much for joining us, everyone, today. I'm exceedingly excited to introduce two folks that I've been talking to over the past 3 to 6 months. We've got Mark Elenowitz here, and we've got Brian Collins, and they're with Upstream. And Upstream is a really exciting player in the digital asset space that I've been talking to extensively. And first, let's have them introduce themselves. Mark, if you want to go ahead first, and then Brian, and let's dig into your company.
Absolutely. Doug, Phil, thank you for having us. We're really excited to be a part of your podcast today. By way of background, my name is Mark Elenowitz. I am the co-founder with Brian Collins, who will introduce himself in a moment. We're the co-founders of a company called Horizon Fintechs, which is a software technology provider that has built software and technology and partnered with a national securities exchange called Merge. I myself, my background is I'm over 34 years on Wall Street. I am a licensed broker dealer, but in this podcast, I just want to be clear and disclaim I'm not acting that capacity whatsoever. What we're going to be talking about today has nothing to do with the United States, and it's all outside internationally. So I just need to make sure everybody's aware and not be confused that I'm doing any type of capital raises or anything related to U.S. securities law. That said, though, what I think is key and why we're really excited about what we've built is that we're a combination of Silicon Valley meets Wall Street. As I said, I've been a banker for now over 34 years. And what I really focused on in that role was creating the democratization of investments by allowing investors to be able to participate in both public and private offerings, and basically bringing Main Street into the ability to participate side by side with Wall Street. Used to be only the Wall Street elite. So I specifically focused on what's called the Jobs Act and Title IV, which is Reg A plus. We're the creators of the ability for that to trade on a national securities exchange. So my firm, under my guidance, did the first and only two onto the New York Stock Exchange, and we've gone on to do several onto NASDAQ. We took that framework, that understanding of securities law, and that understanding of how to interact and give investors protection, information, and disclosure so they can make informed decisions, and applied that to what we're doing internationally, which we're going to talk about today. And it's on our marketplace called Upstream.
Great. Brian?
Thanks, Doug. And thanks, Phil. And thanks for having us on. I'm CEO of the technology behind Upstream. We set about, really, my background is I used to be a public markets CEO, but I'm very technical. So I want to build an environment where the friction that we saw as a public company CEO with people trying to deposit shares for microcap, mega sub-billion dollar companies in the US and try to deposit them for secondary trading is particularly difficult. So we set about building a robust exchange using blockchain technologies under the hood, but it's pretty abstracted from the user. And with that was our vision, is to build a fair marketplace for everybody, where irrespective of where you come from, what accent is and so on, if you bought shares in a private placement in a company that lists with us, dual lists with us, then you can deposit those shares for secondary trading and make some exit liquidity in the event that you need to. So it's really just trying to build a platform that reduces friction in securities trading and opens it up to a global marketplace. And all in the United States, we're very used to trading equities on the apps such as Robinhood and Schwab and so on. And we built an app ourselves that allows people from Australia through to Brazil to come on board, open their accounts, fund their account with PayPal, with a bank wire, with the USDC, cryptocurrency, and trade equities on our platform using blockchain as the source of technology and the source of truth, because blockchain is an immutable ledger. So that makes it very important for us to be able to track and trace all orders, real, and so on.
So in the US, my background's been in the ATS business in the US, and I worked with INX, obviously. If I think about how do you invest in, let's say, private equities or public equities that are on the blockchain in the US today, it's all based through an ATS, and the UI UX, whether it's Securities, T0, or INX, is subpar. You've got to do it on your computer. There's not a lot of apps in this space, and the liquidity is absolutely horrible. And what I first noticed about your company, obviously, was that the UI UX, it is like a Robinhood in that it's something that you can look at on your phone, you can trade on your phone, you can deposit equities on your phone, and you can use a credit card on your phone to essentially go in there and then buy equities. So you must have seen the ATS model, which is accessible to US, and obviously you're not. But you must have seen that model, or maybe you didn't, and maybe you just started from scratch and said, look, let's just look at it from the way that the consumer wants to trade. Like, how did you get to where you are today?
I'm going to address first the security side of it and then let Brian discuss the back end that powers it all. So you hit on something. Unfortunately, in the US right now, the current administration is not very receptive to blockchain. There are many broker dealers in the US that were enamored with the idea of being able to allow fractionalization and securitization of asset classes utilizing blockchain technology. But the SEC and FINRA had taken the position that it's a relatively new concept and that they wanted to understand how it would react and how the interaction would be with custody and clearing, with broker dealers, with what's called regulation safekeeping and 15C3-3, which, not getting too technical, means how are investors' assets protected and to ensure that no one's going to come in and be able to take that asset class or be able to steal it. Traditional Wall Street has always utilized these securities laws to give investor protections, where we have clearing firms and reserves and other types of activities that ensure that investors are protected. So the SEC originally put out a notice and information and then refined it to allow certain types of special purpose broker dealers get involved. And the broker dealers that you mentioned, Securities, T0, INX, those are firms that have been granted those special licenses to transact. The problem, and it comes down to this, is that unfortunately the SEC has stated that broker dealers really can't touch the entire life cycle. So what happens is you're using an antiquated system, which is really what used to be the old pink sheets, where you have a multi-order, a matching engine where bids and offers can go out and they need to settle away. So you can't have a marketplace that takes hours, days, or weeks to settle. Not in a world where we all, like you had mentioned, Robinhood, where everybody's instantaneous trading. Wall Street is a matter of milliseconds now with the way technology works. So if you have to wait for a trade to take even an hour, it's far too much. So when we built the framework of the security side of the technology, and again, Brian will discuss the technology side of the technology, we built it on the backbone and the understanding of how we want to see a traditional marketplace works. To be clear, we operate an exchange called Upstream. Upstream is a member of the World Federation of Exchanges, an affiliate member. There are about 250 global exchanges in the world: the New York, NASDAQ, Tokyo, London, Hong Kong, all the major exchanges. What an ATS is an alternative trading system. It's a walled community where investors can come in and transact. In fact, the original ATSs were the term is really a dark pool, where firms would allow institutional marketplace to have institution basically do off-market transactions. In fact, the OTC marketplace as a whole is not an exchange, it's an ATS. We're an actual stock exchange. So we allow real-time settlement. Investors can come in, open an account, and buy and sell securities. But what's unique about our marketplace versus the US market or the Canadian marketplace is we're in a T0 instantaneous settlement. So investors come in and they're instantly bought and sold. So there's no T1 settlement. There's no market makers that are taking inventory and routing or basically looking for best bid, best offer spreads. It's our marketplace is designed where investors have full access to the order book. They can see buys and sells. Everything is out on the blockchain that you're able to see that. And most importantly, is you have a fully displayed open order book. So there's no ability to market manipulate or layer or spoof or any type of icebergs or any type of predatory and manipulative activities that we see. And most of all, there's no ability to short sell. We do not allow market makers to take inventory positions, and we don't allow anybody to hedge. So that is what in a regular market without the short selling. An ATS doesn't have any of those capabilities. So the ATS, you need to come in over a wall. You need to be approved in. You need to be able to then place a bid or offer, wait for it to be matched, and hope for settlement.
Got it.
You can take the technology side here. That's all.
Brian?
Sure. From a technology point of view, what we try to do is reduce friction.
A shareholder of an equity can essentially go into your app, type in the ticker, the account that it's being held at, and then you can move the equities to your exchange, which would then create a digital representation that would then trade on your exchange. Am I right there or am I wrong?
No, that's correct. Absolutely correct.
The nuance of it, though, is that we're not creating new instruments. It's the exact shares that are already issued and registered with its jurisdiction. So that actually is a good point to expand upon, is that we utilize the transfer agent as the gatekeeper in and out of our marketplace. So like any other market, let's use Canada and the United States, you have what's called a depository. So it's CDS in Canada and it's CD & Co., which is where shares are traded on NASDAQ or the New York or even the OTC. So what happens is shares are traded in that depository back and forth. And the way they enter that depository is directly through the transfer agent. That same concept exists with us. Shares are traded in our market under what's called merged dep, which is our equivalent of CD & Co. And those shares are deposited and traded. So the transfer agent is the gatekeeper in and out, where we don't allow any type of even manipulative activities from KYC or AML or money laundering, because we don't allow third-party journals. So why this is important is those shares that are registered in its primary jurisdiction are traded in our market. So they would leave, let's say, NASDAQ, go to the transfer agent, move from the transfer agent into our marketplace, trade with us, and at any time an investor can go onto the app and hit withdrawal and take it right back to the New York Stock Exchange or NASDAQ. So it's fluid. It interacts. The only difference between regular markets is where our exchange is a member of Euroclear, which is the equivalent of DTC in Europe. However, when you're dealing with the blockchain, it doesn't currently navigate or integrate with the plumbing system of traditional Wall Street. Now, we believe that's going to change. And hopefully, as we see more adoption in the US from the regulators and more adoption from US investment banks, we'll be able to see that eventually translate into a full, seamless, open border marketplace. But as it stands today, that's okay. We can use the transfer agent in and out. Our firm is actually a stamp medallion guarantor. One of our affiliates is what's called a sponsor advisor, which is equivalent of a Nomad or a POW on the London Stock Exchange or AIM market. So we're able to actually stamp those stock powers in and out. So we make it fluid and seamless for the investors to be able to transact.
So if my friend over in Japan owns Tesla and he trades it in New York through his Morgan Stanley account, and let's say he wanted instead to trade it on your app, because my understanding is you're open 20 hours a day, so not just during market hours. If he wanted to do that, would he just deposit it, or do you need to get approval from Tesla if you were to do something like that?
We've taken the approach so there's a couple different ways of looking at things. There's what's called a primary listing, a secondary dual listing, and then a quotation. We're, as I mentioned, a regulated marketplace that allows primary issuances. So we do IPOs, follow-on secondaries, and instruments like debt, preferred. Any type of security can be traded in our marketplace. Everything is done by prospectus. It goes through our regulator. So investors have informed decisions to make by reading the prospectus to decide whether it's appropriate for their risk tolerance and suitability. What we also have the ability to do is take a company that's listed in any other jurisdiction on any other market, and we can dual list that security in our marketplace. We allow that company, as long as they're current in their jurisdiction with their regulatory filings, to be compliant and current in our market. So there's no additional regulatory burn on the investor or the issuer to trade in our marketplace. Now, that said, in theory, we could allow Tesla to trade on our market without the permission of the issuer. And that happens, and we're starting to see more and more of that, where we see other marketplaces announce that they're allowing Tesla or Microsoft or some other company to trade in their blockchain market. That's a derivative. That's a hybrid. That's not the real instrument. As I said, our gatekeeper in and out is that actual transfer agent. So if the issuer was not compliant with wanting to be on our exchange and an investor wanted to deposit that position, if it was a large enough position and we set up perhaps a special purpose vehicle, we would allow that Japanese investor to do. But one-offs, we probably wouldn't allow. And it wouldn't really make sense. Why would you trade in our market when you could trade on NASDAQ?
So how does it work? Do issuers come to you and say, we want to have a dual listing? Or is it someone says, I want to deposit these equities, can you please check with the issuer?
It's a combination of both. The reality is right now what's going on in the small cap and micro cap, and I would even say the mid cap market in North America, is it's been absolutely horrendous. As a banker for the last 2 years, we've never seen it as bad as it is. The big market goes up every day. Everyone's 401ks and IRAs and retirement accounts, they're all smiling. But when you're coming into the small cap marketplace, the reality is it's been decimated. So what issuers are looking to do is try to find the ability to attract investors that want to get an opportunity to buy those securities, who traditionally have been alienated and not been able to do.
And where are your users coming from? Where are your investors coming from? What
So
countries?
our investor pool is international. So there's a rule in the US called 15A6, which prevents foreign broker dealers and exchanges from transacting with US citizens. And that's why we don't allow Americans or Canadians to buy and sell in our marketplace. But there are a lot of people around the world that want access to these really exciting growth companies. It's almost impossible to go to Canada, open an account to buy $1,000 of stock. It's just,
I know, I've tried.
so imagine if you're in Southeast Asia or in Africa or Europe or South America, and you see a roadshow of this great opportunity, or more importantly, you just see the opportunity on the internet because there's no boundaries and you want to buy it. You can't, but with Upstream, you can. So that issuer now has the ability to list in our market and now be able to get access. So it's very common to see a Canadian listing and a US listing simultaneously, and sometimes a German listing. So now they'll have a third or fourth, which would be our market. We're designed for somebody from their home to be able to download an app right to their smartphone and be able to buy and sell just like we do here in the US. Now that might sound strange, but Brian can attest to this. In Europe, it's virtually impossible to do that. You have to go down to your bank, you have to make an appointment, and a lot of the bank officers won't even allow you to buy sub $5 stocks on the New York or NASDAQ. If you're buying IBM, sure. But if you're trying to buy some new junior mining company or some exciting new technology company, you're not going to be able to do. With Upstream, you can now.
All right. So there's demand for these equities, but there's a lot of barriers in place for people traditionally in order to buy them. And what you're doing is you're taking away those barriers to entry. So creating a whole new pool of capital that may be looking to invest in these companies.
So the benefit is threefold. So the benefit is an investor finally gets access to equities they're interested in participating in. The issuer gets additional exposure, liquidity, and capital, which ultimately translate into more liquidity in its master market. And then also it gives economic benefit directly to the issuer as well as the community. Companies are able to now raise money and be able to go into, use that capital to reinvest in their local economy, create job growth, and create other opportunities to grow that business. And we take that concept, what we're really building here, and we're talking a lot about North America, but there are multiple exchanges throughout the world that have great opportunities that no one has access to. I'll give you an example. You're down at the Jamaican stock in Jamaica and you drink some Red Stripe as an example, and you want to own it. You're not going to be able to go open an account at a Jamaican stockbroker to buy on the Jamaican Stock Exchange. That would be a classic example where that company would want to be able to have the ability to dual list in our market, because then everyone that visits that jurisdiction on vacation and wants to own a piece of that great rum company, beer company, whatever company it is, they can now do that. So there are markets around in South America and in the Caribbean, all throughout Europe and Southeast Asia that can now create economic development for their local economy. And more importantly, giving those issuers the ability to reach a global audience. That's what Upstream solves for.
Business development seems like it's going to be pretty easy for you guys. Like I look at the Venn diagram, you're looking for essentially issuers that have cross-listed, let's say in the US and Canada, maybe in, as you say, in Germany. So you know that the issuer is already interested in looking for different pockets of investors. And then what you call the company, like how, or are the companies searching you out? Are you a household name right now to a lot of companies?
No, we're 5 years, 7 years in the making. We've been quite successful over the years as we built this. Brian will give a little more information on the technology. It's really impressive. It's over 4 million lines of code. We were founded by Wall Street professionals. We are funded by Wall Street professionals. So we all have relationships with issuers, service providers, transfer agents, IR firms, law firms. They're all investors. So they all have issuers that they work with. But the reality is whenever you're a new market and you're trying to create new opportunities, it's slow going. And we're now at the transitional point where we're really going into what we consider to be very attractive growth. So what we decided to do is eradicate any listing fees for the first year. So we're allowing any issuer in any jurisdiction to dual list in our market without any cost. And in addition, we provide them with economic benefit of IR programs and other type of visibility programs that are valued over $100,000 to create liquidity for them in their master market while our market develops. So To answer your question, we think it's a no-brainer. Why wouldn't you? There's no downside. There's no additional regulatory burn, and we utilize your existing filings. But the reality is we're just getting started and we got to get that word out. So working with people like yourselves and spreading that word is exactly what we're trying to do now.
But if an issuer in the US or Canada or anywhere around the world says, look, I want to be listed with you guys, they still need an external investor, an investor in that equity outside the United States that is willing to bring their shares to you.
Yes and no. So in order to establish the float, as I said, it's the existing shareholder base. It's not new issued shares. So somebody needs to be able to deposit stock is option one. Option two, and I've said it before, we're a securities exchange. We have the ability to do follow-on primary and secondary offerings. So we have the concept of registered securities, just like in the US or Canada or any other jurisdiction. So in theory, some of the issuers that we're talking to are looking to raise money. And I'm going to give you another classic example that will answer your question. During 2010, really up, still happening today, it was a giant boom, or actually 2000 to 2010. There was a big boom where we saw a lot of Asian-based companies come public in the United States. And there was a lot of opportunity where there was a lot of growth. And unfortunately, there was also some issues that originated from some of those listings. So US institutions and retail have been a little bit shy to invest in these opportunities. Any type of cross-border early stage opportunity has inherent risk. But in the local jurisdiction, that company might be well received, liked, and very well respected, where those investors want to buy the stock. But unfortunately, they can't go to NASDAQ and purchase it because it's a $3, $4 stock, and they're not taking foreign-based investors. That would be a great company to list in our marketplace, because now you have an enormous opportunity of investors that are offshore that would now, who believe in the company, know the company, use the product, and now want to get involved. So that company could then do a securities offering on our market under what's called Reg S. So they're selling to international investors. We don't have to worry about the securities coming back to the US because there's no US investors that transact in our market, and it can't happen. So for that purpose, the company would be compliant and be able to sell securities, which would create the float. So we have several issuers that we're in discussions with that are looking to do that. It's a great way to raise capital, great way to get visibility, and great way to attract new investors to your company.
Now, can you only list public companies? What about private companies? So if someone does a Reg D, Reg S in the United States, could they take the Reg S side and could they do a raise, so a primary raise through Upstream?
Absolutely. That's exactly what I was saying. So the investor protections in the US are really designed to protect US investors. So Reg S allows a domestic corporation to be able to sell securities internationally as long as those securities do not come back to the United States. Being that Brian and his team built very sophisticated technology that has liveness detection and other types of protections to make sure and ensure that Americans are not transacting in our market, we can feel confident that the company will remain compliant and be able to sell those securities internationally. Outside the US, they can trade free trading. Just like
let's say I did a Reg CF in the United States. I wanted to raise $5 million for a company, and half of them come in from abroad. So private issuance under Reg CF, half of them come in from abroad. I get 2.5 million there. And I say, you know what, we're going to tokenize this and we're going to send it over to Upstream. We're going to give these guys the opportunity for a secondary market there. I guess the question would be, is the issuance size too small? Do you have a limit there's a minimum float? The second one would be, can you only list things that are under a full prospectus, let's say in the like an S1 or F1, or under Reg S, or would Reg CF also be something that you're able to list something under? Like what's the floor in terms of what you guys can list or can raise for?
So the answer is better, rather than the floor, what's the disclosure standard? For us, what's important is going to be disclosure to investors so they can make informed decisions. And that disclosure requires the equivalent of the old days. If your listeners, I think you said you're the old man listening, or you think there's...
We're the old men talking, and
Old
then
man
I think it's the older folks that are listening.
Old, but yeah.
Okay, the old way it used to be, it was called SB2. In the US, you have companies that are current reporting with the SEC. These are registered securities, or alternative reporters that are on the OTC. In essence, those are the standards that we have. The company must have an independent board. The company must have adequate disclosure, management financials, an annual audit. As long as that information is presented, and if you think about Reg CF as that example, well, a Form C requires anything over 1.2 million to have reviewed or audited financials. Under that, it's reviewed. So they would be compliant in their disclosure as long as they continue to report semi-annually and annually with us. We don't all require quarterly financials. That would be a great way for an alternative filer that's not a reporting issue where CDAR in Canada or the SEC under 34 Act in the US, they would be able to remain compliant and be able to sell securities in our market.
So
I get a lot of
quickly-
issuers that talk to me and they think, oh, I want to do a Reg D, Reg S as a token. And my views right now is, why would you do it as a token? Instead, why don't you raise the capital under Reg D, Reg S with an option, a couple of paragraphs to say that you may decide to add liquidity by giving people the option to make this into a token that could then be listed on other exchanges for a secondary market. Because obviously, if you do a straight Reg D, Reg S in paper form, there is no secondary market, and there probably never will be. But if you do it in tokenized form, you can open up that Reg S part so that there's a secondary market for folks outside the US, or even for under the Reg D. If it's the Reg D would be on an ATS, wouldn't be with you guys, but the S part could probably trade on your
Actually, the Reg D can trade with us as well. So Reg D isn't limited to just domestic investors. It could be international still.
Right.
As long as the investor itself is a non-US citizen and not in the United States transacting, and we can accept them. So where you would run into, and even our Reg CF has a 12-month statutory hold and Reg D has a 12-month statutory hold. So as long as the statutory hold has been met and the company's counsel is willing to write an opinion to lift the legend, we would accept those securities to trade in our market as long as, again, they're compliant with their disclosure with us.
Now, how quickly can that happen? If someone comes and they have their disclosures, they have their paperwork done and complete, what is that process to onboard onto your platform?
About 3 weeks. So we adopt those regulatory filings. We write what we call a listing particular, which is like a light prospectus. If it's a primary issuance, it's a full prospectus. But if they're already have disclosure in other jurisdictions, we adopt that disclosure by reference and then incorporate that. So it's about a 3-week process. Our team will work with you in creating a visibility program and all those benefits that I had said. And then during that time, we work with the company to make sure that disclosure is adequate and that it's been approved. And once it's approved, it goes into Brian's world where it's tokenized and creates this great ability to trade. We deposit those securities. We work directly with the transfer agent. I'm going to let Brian talk just for a moment here about some of the really cool technology that we built to integrate with US transfer agents. And I think this is a key point. I said at the beginning, our gatekeeper is a transfer agent. A transfer agent is regulated by its jurisdiction, which ensures compliance. So we've been able to build technology that interacts with them to allow the seamless ability to move securities in and out of our market without the friction. And the biggest thing, and I cannot reiterate this enough, it is extremely difficult, and even in the US, to deposit securities or transfer securities to any other shareholder, you must have what's called a medallion stamp. It's a green stamp. It's a real pain in the ass to go get. You have to go to a bank or you find a broker dealer. But if you're outside the United States, forget it. It's virtually impossible. We handle all that for you. We do stamp it and we allow that integration to occur. And Brian and his team built some really cool technology to do that. So with that, Brian, maybe you want to touch upon that.
That's just a high level view. The idea that any technology here, Douglas and Phil, is to make it seamless for the user. So we don't need a big, huge palaver to get the user to do this stuff. The user has shares. Normally, they're in book entry of the transfer agent in the person's name and address and a number of shares. The most popular transfer agents offered in America right now is Transstar, and we have a Transstar API on our side. So that when you download the Upstream app, you basically tap a button for deposit securities. You enter the ticker symbol and the number of shares. You hit next. We sign that transaction using blockchain technology on the app. It's all very transparent, easy to do. That causes a request to be sent to Transstar in that person's name, and if we match the person's name and address, those shares will move from book entry at that person's name straight over into Upstream, and we'll be there in a minute if we have the API integration.
That's just amazing.
API integration, Transstar. Unbelievable, Doug.
Yeah, I
because we've already made the arrangement.
How long does it take? Is it like 5 working days, or is it like?
Typically, it's
5 minutes
of the
with that
transfer. Some transfer agents Once they get the notice from us, they'll do it electronically within 20, 30 minutes. Some transfer agents take up to 7 business days. Each one is different. So unfortunately, what we say to everybody is it's up to 7 days, and it could be as quickly as a few hours.
Yeah, I've faced a lot. I guess when I was at INX there, I think we were always talking about taking equities and listing them, and whether it's for the US investor or for people outside the US. And it just seemed like it was a heck of a palaver. And you guys have figured it out. And now you're obviously offshore rather than onshore. So in that regard, maybe it's easier if you're not looking at it from a US perspective.
No, we're actually looking at it completely from a US perspective. We built it for the US, but the US isn't ready for this yet.
And with a change in administration, let's say, does that mean then at Upstream would be able to figure out how to open up as well to US investors?
That's our ultimate goal. We originally were open to US investors. We took the position, which we still feel is a valid legal position, that we were able to transact with US investors, but the current regulatory regime felt differently. And there was no point in trying to navigate a marketplace that really wasn't accepting a blockchain technology yet.
And how do you define a US investor? Is it based upon residence or based upon citizenship?
Citizenship.
So non-US,
Oh,
non-US
US
investors. So from a user experience, are they looking at this in their native language from where they are, or like what is that experience like for them?
So we typically have it in the English, only we can localize it in our languages. But typically most securities and disclosures are done in English. So that's we use the app in the English language. The definition, Douglas, of a US person is a formal one. It's from the SEC. And it's a US passport holder, citizen, and or a person resident, ordinarily resident in the United States. So they are not permitted to trade securities on our platform. And our app detects that during the KYC process, and we know what you're entitled to do. Anybody can download the app. US persons can deposit money, for instance, and they can buy NFTs collectible on our platform, but they can't trade security. So that they're prevented or actively prevented. It's not via IP. You can't bypass us with a VPN. None of that stuff will work with us. Right? So we're very strict on our criteria. We have to be. Right? If we say no Americans, then it's no American.
Okay, so in the last couple of weeks, I've seen your LinkedIn announcements, and I think it's 4 companies you've announced that are going to be listing with you or have already started listing. Is that the sort of momentum that we're expecting, or is that just a bit of excitement? Do you have a large pipeline of customers? Are you able to talk about that?
We are constantly marketing and networking. As I said, we're made up of the Wall Street ecosystem and community are investors. So they have all been working with us to create visibility for what we've been able to accomplish for these issuers. So when we first started last year, we had quite a bit of momentum. We had over 30 NASDAQ, New York, OTC, and international companies that were listing. And we had to take a little bit of a pause as we were navigating the US regulatory marketplace. Now that's been sorted out, we're just getting started again. So I think you're going to see this momentum continue, but it's going to be beyond just what we're doing with just issuers. We're much more than just a dual listing exchange. We are a marketplace for securities from around the world for international investors across time zones, across jurisdictions to be able to purchase. So we have some really cool, innovative products that are coming out linked to ETFs, being able to buy cryptocurrency that we're creating into a security, like what we saw with the recent regulation changes here for Bitcoin and Ethereum and types of meme coins. So these product launches are going to be coming, and as they continue to be rolled out, and as the issuers continue to sign on, I think we're going to start to continue to get the momentum, not only for the dual listings, which is continuing, but for these cool new products that are really going to attract investors to have the ability to trade in a safe, secure, compliant manner and get access and touch points to non-alternative or to alternative asset classes like cryptocurrency, but in a securities type marketplace.
What's the relationship between issuers and market makers? So an issuer comes along and says, look, I want to do a list with you guys. I think that we were looking for a market maker, and my understanding was that where we were listed, you don't pay the market maker out of the market maker is there for you. Do you have market makers for these instruments once they're trading on your platform? Or is it really just based on people's bids and offers?
So the market is designed with no market makers in the traditional sense. Now, being that this is a blockchain-based market, Brian and his team have mimicked some of the types of activities that we've seen in the decentralized world. They'll talk about it now. So we have some really cool technology through what we call automated market makers, an AMM. And that's something that our regulator and our exchange allows the disclosure of issuers to be able to utilize that type of concept and for investors to be able to come in and be able to participate. So with that, I'll let Brian expand on it.
But just to touch again, it's on a high level there, Douglas. We run automated market makers. I use the constant product formula, which is effectively a blockchain type technology. It allows persons, any person that has cash and shares, to deposit them in the ratio that will set the price. So if it's $100 and 50 shares, when you put those shares in, that's a $2 share. If it's the first entry to the market code, the liquidity code, that's what they're called. And you create the bids and offers automatically at that point. So you have lots and lots of bids, and you've lots and lots of asks underlinked, created automatically by the technology. So the market maker is there. So anybody who places a market order or a limit order that will be executed will be matched instantaneously. The person who supplies, as many people as they wish, can put money into the market maker, just decentralized exchanges.
So,
Okay,
so I have a question. So are there any other applications around maybe sports entertainment or any other unique uses of the platform that either are up now or maybe thoughts of in the future?
Absolutely. So we've changed with the times. So we were, and I'm going to go back to being what I think is the key point is we are regulated and we are a securities exchange. So we've always taken the position, NFTs and any type of instrument like that has anything that touches the Howey test is a security. No ends, ifs, or buts about it. And we agree with the US regulators in that stance. So we've always worked with that kind of concept to take those instruments and offer them on our marketplace. So we were ahead of the curve years ago. We were doing fractionalization of technology, fractionalization of music royalties, ownership in sports teams. We originally had a concept called Global Fan Exchange, which allowed ownership in professional athletes and their future income streams. All that were systems, technology, methodology, and disclosure that we built. In fact, we were working with the largest movie studio in Bollywood, tokenizing a royalty stream related to all the music that came out of the Bollywood films. What happened, unfortunately, and I think things work in cycles, is that NFTs became a 4-letter word. We saw this nonsense of buying a picture of an ape and thinking that you're going to retire, and all these young people that were coming in and trading these type of asset classes, when in reality they were nothing but puffery.
Mhm.
So we have the infrastructure and we're waiting patiently because we believe that NFT technology, for what it's really supposed to be used for, going back to sports teams, fan engagement, front of the line passes, VIP experience and ticketing, all the other things that some of the major brands in the world are recognizing, like Louis Vuitton and Porsche and others, and even Delta, it's coming. But I think people just took a pause. And sometimes it's good to have a clean out of all these bad actors, because the next race and I think the next wave, if you will, is going to be better than before. And doing it the right way and making sure that it's done properly is what Upstream is in a position to do.
Well, it would make a lot of sense because all the major venues have moved to digital ticketing. So the fan experience, they're used to a digital experience, not necessarily having to see, touch, feel anything. But then with this technology would potentially give them a lot more access or additional identification as VIP or mega fans, or if they're a part of
at a concert. And by the way, we have a lot of celebrities. We have athletes, professional athletes that are investors in us because they were part of that movement. We have a very famous professional musicians and entertainers from the global stage that are investors in us. Everyone was positioning themselves for this boom. But the minute you see all this negative news, no celebrity wants to put their name to it.
But Americans be able to use that side of your app?
Anything that's a non-securities related side. So fan engagement with no economic benefit, no upside, no dividend, no ownership, no participation, no Howey test, touch points? Absolutely. In fact, that's just think about this world. COVID changed everything where you just said it. People are used to it. You never would have gone into a restaurant and scanned your menu. Now all you do is scan your menu. I find it annoying. I still like the old menu, but at least you still get,
it's annoying.
that's what's happening. So imagine going to a concert, or well, we were working with some of the hip hop Hall of Fames and museums and other things where you go and you see that beautiful Monet, and instead of going to the gift shop, you do a scan of the QR code and you instantaneously are able to get that product and take it home with you. Or you're in a concert and you're able to geofence where that particular entertainer puts out a QR code during that one song. Everybody in the audience gets airdropped a commemorative, like they're getting a towel or a hat or anything else at a sport event. There are things like that. And that NFT is a VIP experience that gives you backstage access for a meet and greet. And we take it one step further. We have KYC and AML technology because you are buying on a regulated marketplace. So I work with a lot of celebrities and entertainers, and their biggest concern is some wacko going to come backstage and put me in harm's way when I'm doing a meet and greet. I have security sitting there, but who knows what's going to really happen. This way we can actually know who's coming in advance and being able to provide that technology to get that information to their security detail to make sure that some stalker is not coming through. These are the things of the modern techniques of where entertainment is going. Blockchain, I think, powers it, and a marketplace like Upstream enhances it.
Mark, the way that you and Brian talk, it's refreshing in that I think we talk to a lot of folks, and certainly I've been immersed in this business for a while now as well. And there's a lot of hoopla. There's a lot of guys that don't know what they're talking about. There's a lot of guys that have that Facebook approach of we'll break it, then we'll fix it, which obviously you can't do in finance, in the United States, certainly. But you guys seem to be taking the right approach and moving in the right way. And the UI UX is, to me, just incredible on a comparative basis to what's available to folks in the US for a similar type of instruments. And it sounds like you're poised for growth. Are you guys doing a raise right now?
We are. What we can say is that we're doing as I mentioned earlier, we've always been financed through investors that we have relationships with that are active in the community. There's two things that are happening right now. We're doing a regulation CF financing. This is for up to 1.2 million for non-accredited investors in the US or internationally. So the key here is if you're a US citizen, you can't trade in our market, but you can sure benefit from the returns that we hope to eventually make. So you can own a piece of this company that provides all of the technology and shares in that revenue from the market.
And because it's Reg CF, that's open to retail.
It's open to retail. It's a $30 share purchase. It's a minimum of $1 investment, and it's open to everybody. So if you want to get access, you can go to invest.horizonfintechs.com.
We'll put it up.
We'll stick it up there for sure.
But the key is make sure you read the Reg CF Form C disclosure, understand all the risk factors and what's associated with it. What we're also doing, though, is outside the United States and in the US, we have a 506C for larger investors that can participate as well. So that's something it's a different instrument. It's straight common stock, where the Reg CF is designed with a little bit more of investor protections since they're non-accredited investors, and that's a preferred instrument. Both are available. One allows accredited investors, one else allows non-accredited investors. But it's a great way if it meets your suitability to learn about what we're doing and be a part of our future growth.
What are you going to use that money for? Is this for marketing, technology? Do you have a sort of a breakdown?
Primarily, it's going to be used for continued technology expansion as well as marketing from both issuer acquisition and investor acquisition. I've done a lot of talking about the security side, but Brian is being somewhat humble. He and his team have really built some incredible technology. They're made up of Microsoft engineers. They've been able to build really cutting edge, I guess you could say what I think to be, and I could barely turn on my phone, but some of the most modern technologies. I'm going to let him talk about that because I think under it all, and it goes back to what we said at the beginning, when you marry Wall Street with Silicon Valley, and just to answer one thing you said, Doug, and I always like to say this, I have been on so many phone calls throughout the NFT boom, and I'm a regular speaker at NFT NYC, and people don't like talking to us because we tell them what they're doing is against the law. And even large corporations, major movie studios and record labels all thought I was crazy until they came back and said, you were right. We used to sit on the webinars or go to the different conferences and sit on the panels. Everybody was an expert because they said so on LinkedIn, but none of them have ever done a deal. They're technology guys that became stock guys, that became blockchain guys, that became cannabis guys. And I don't know what the hell they are today.
Yeah.
Well, now they're in AI.
Yeah. You're not going to a dermatologist to go do heart surgery, or worse, you're not going to a nurse practitioner to go do open heart surgery. So you really need to work with professionals. And that's what we assembled. We've got the Wall Street side, and then we married it with the Silicon Valley side. We're guys who can actually build something themselves and not buy it from off the shelf from someone else. Brian, take it away. I think it's
more like the secret of my internet connections argument was fairly patchy, but the secret to good technology for me, it should be seamless. You should download the app and not think that there's a wonderful, amazing piece of tech under the hood. The UI UX is everything. So the user interface, user experience is everything. And we try and make that as elegant and sophisticated and simple to use as we possibly can. And under the hood is all the trading and compliance and order books and market making and all of this functionality there. It just means you put in a market order, it gets matched. That's all you need to know as a technology user. But the technologist, we need to understand all of the moving parts. And for that, we have a team that we've built in Ireland, England, and America, and Switzerland that allow us to build out this software with 4 million lines of proprietary code. Every single thing we do, we built ourselves. We run on Ethereum, and they're two optimistic roll-up blockchain. We write all our own blockchain code as well. But you won't see it. You as a user, you don't know that your token, your shares are token. So that's not relevant to you. You want to buy low, hopefully, and sell high. That's really what you want to be able to do. And do it as easily as possible, as simply as possible, less friction as you can, or indeed invest in interesting companies. So the idea is that that's why, Douglas, you mentioned, we made it an app because everyone wants to carry this stuff around in their phone. So put it into your phone, have your private key on your phone, sign a transaction in your handset. You don't need to bring a ledger and NLX. You don't need to bring MetaMask. You don't need to do all of those other blockchains. Why? Because we built our own signing system. Our own Ethereum signing system is inside our app. You don't, as long as you can smile for the camera, you can sign a transaction because your Face ID will unlock the private key.
Yeah, this is music to our ears. It really is.
Or how it should be.
It's one of the biggest blocks. People always say the biggest block to this has been regulation. And I'd say the biggest block has been absolutely horrible UI UX. Because we're so used to frictionless, we're using Amazon or using E-Trade. We're not used to friction. And as soon as you bring friction into it, it's a disaster.
Or sometimes even novelty, Douglas, because people just get bored. Oh, that's too complicated. Why do I have 6 screens instead of 4? Why does this button not do buy? Because usually the buy button is on my left thumb. It's silly stuff, but that's what they want. That's what people like. And it all needs to stand there and say you're wrong to like it on your left thumb. We as technologists need to understand why they would prefer it on their left thumb, develop something that works on their left thumb, and still does blockchain. That's what we need to be able to do.
Yeah.
Is understand our users.
And many blockchain companies, when they wanted to build something, they went to the developers and say, what's the easiest way to build this? As opposed to taking it from, this is what the user wants.
Yeah, I remember when I first got started with crypto and Bitcoin, I was afraid that I was going to copy paste the wrong letters, numbers, and that, I'm not going to lie, it delayed me from quick adoption because we're talking about dollars and cents. And I was scared that I was going to do something wrong and poof, my money was gone.
And we're going to call it with people of a certain age. And what you don't want to be learning is how to use crypto and how to do all this stuff. And we're a backwards baseball cap and all that stuff. We're done with that. So I'd rather have a system where I can deposit my money and buy shares in interesting companies and then sell those shares in interesting companies. What I want. Why are we listening to that?
This is very refreshing. Listen, Mark, Brian, thank you very much for joining us. How do we get in touch with you guys? If folks that are listening want to get in touch with you, where do they go?
We encourage everybody to go to upstream.exchange. You'll find out everything we just talked about today, all the information on the exchange. There's an FAQ section. There's a contact us section. If you're an issuer and you want to list, it talks about how to go about that process. Somebody will be in touch with you as soon as you send us a message. We have a whole team that's on standby. And the same thing, if you're interested in actually playing and transacting and interacting with our marketplace, go to any of the app stores, just type in Upstream. You can download it. And in a matter of minutes, you can be accessing equities and trading internationally.
Very
Fantastic.
good. Thank you.
Fantastic. Thank you very much, gentlemen. This has been wonderful. I'm Phil Larman,
And I'm Douglas Borthwick.
and this is Old Men, New Money.